My name is Angie Juzang, and I am the co-founder of Legacy Business League, and we are helping to facilitate this series sponsored by Hancock Whitney, some wonderful partners that support community organizations like the Legacy Business League, which is a minority chamber of commerce. We exist to help socioeconomically challenged and minority businesses, entrepreneurs to be successful. And we bring them all kinds of information and such as grant writing workshops and small business matters, and now home buying, which is very essential to fulfilling people's financial goals and their dreams about where they want to be in their life and create a lifestyle for themselves and for their families. And we have some fantastic information to share with you today, and some wonderful partners that are very schooled in who's who in the mortgage buying process, what financial products, well, that will come later. And so that this is a first of a three-part series. And LaCarsha will tell you a little bit about the other two. And so LaCarsha Babers, she is here with us today. She is with Hancock Whitney, and she's going to welcome us and tell us what we can expect. And then we're going to utilize a slideshow and talk about your mortgage loan process, who's who in the mortgage loan process, the three phases of the process, and call on some people that you see on screen here now. So LaCarsha, please go ahead with our little welcome.
Okay, awesome. Thank you so much, Angie. As she mentioned, I'm LaCarsha Babers, and I'm the Community Outreach Officer for Hancock Whitney Bank. And we welcome you again to the Housing and Financial Empowerment Session 1. This is the first session. This event is brought to you by Hancock Whitney Bank in partnership with the Legacy Business League, as well as the Housing and Economic Education Alliance. I am the Community Outreach Officer, and as the Community Outreach Officer, one of my responsibilities is to ensure that I'm developing, building, and strengthening relationships with community partners who have either affordable housing, economic development, revitalization, or stabilization as their service, or they have provide this support in the community. Well, tonight we're coming to you and we're going to talk to you about the mortgage loan process. Here at Hancock Whitney Bank, we have over 200 financial centers conveniently located to help us meet the needs of the community. We have financial centers in Alabama, Mississippi, Florida, Texas. Have I missed anything? In Louisiana. That's why I sit in Louisiana. So we welcome each and every one of you tonight. We hope that this is a very informative opportunity for you to learn about the mortgage loan process. We have HUD certified counselors here that are going to give you the step-by-step guidance. And we also have our community lender, Maria, that's going to give you some guidance, resources that you need so that we can help you make that road to homeownership a very successful journey, a very successful opportunity. This is session 1, like I mentioned earlier, and then we'll come back in the month of May and we're going to share with you some information on financial health. We'll talk about budgeting, managing your money in session 2. Then we're going to conclude in June, which is also home ownership month. And we're going to be talking to you, do a deeper dive on the resources that are provided. We have down payment and closing cost assistance options as well. So we'll come back in the month of June, which is session 3. We'll conclude. And Maria is going to give you more details on the resources that we provide at Hancock Whitney Bank, as well as Miss Sylvia, who's the Executive Director of the Housing and Education Alliance. They're both going to talk to you tonight about that process. We're grateful that you are here. Thank you to all of our attendees, our participants. And we also have with us one of our community lenders. And I'm going to ask her, Latanya, if you will, to put your information in the chat. So if there's anyone in your market that sees this recording and they would like to contact you, they're ready for the process, they'll have your contact information. Again, LaCarsha Babers, Community Outreach Officer, Hancock Whitney Bank, and we hope that this series is beneficial to you. Back to you, Angie.
Okay, thank you so much. So I saw a couple of other people join us. I have unmuted you so you're able to ask questions if you feel appropriate. When we get after each section, I'll ask if anybody has anything to say. If you prefer to just put it in a chat or the question and answer, the Q&A down at the bottom of your screen, please feel free to do that so we can make sure that you have a personalized experience. You have some experts on the call, so this is the time to ask those questions. So we're going to go right on into your mortgage loan process, and the person that's going to lead that tonight is our community partner and special guest, Sylvia Alvarez. Housing and Education Alliance, the founder and executive director. And this is what I mentioned before when, Hancock Whitney supports the community partners out in that are doing some great things and helping folks, fulfill their dreams. Over the last couple of nights, I've learned about organizations such as Ms. Sylvia's that are right there with you, hands-on, helping you through this process and giving you, the right path and journey to fulfill your needs. So the rest of us are gonna hop off camera and let Ms. Sylvia run the show. If you would please tell us a little bit about the Housing and Education Alliance first, and then let's go right into beginning your journey for the mortgage loan process. And I'm going to pull up the slideshow while you're introducing yourself.
Okay, thank you so much. And first, I want to say thank you to Hancock Whitney because for taking the time to put this together and to help the community. It is so badly needed because buying a home is not a very easy task, and you can easily be strayed and go in the wrong direction. But Housing and Education Alliance actually was started in 2002 to address the need of educating home buyers. My background is that I'm a licensed realtor. I also have my lending license, and I also have the ability to be able to go out and speak to people and tell them what to do and what not to do when they're trying to buy a home. So we're very thankful. Over the last 20 years, this is our 20-year anniversary. Over the last 20 years, we have helped 45,000 Tampa Bay area residents with purchasing their first home. We teach the home buyer classes. You have to take a home buyer class by a HUD certified agency in order to receive down payment assistance, whether it's from the government or from a lending institution. You have to take a course, and the course covers so many different things. It's really an eye opener. People come to class thinking, oh, I'm just going to sit through this so I can get my certificate. And by the time they leave, they're begging for more, because it's the class that we teach, and Medea has helped us set in on several of our classes. It's not boring. Our class is fun and entertaining. It's not just somebody reading a PowerPoint for 8 hours, because that's what's required by HUD. So anyway, let me jump into what I'm supposed to be talking about here. And the advantages of owning a home, there are many advantages. The first thing is you're building equity, and you can eventually, if you need to, borrow against it. The housing prices up until recently normally have gone up from 3 to 5% a year in our area. Most recently, I'm sure that you all have heard, home values have really gone higher. So what we're trying to do is make sure that you understand all your responsibilities when you're buying a home, because you're not a renter anymore. You now have responsibilities. It's a great investment. When you buy a car, the car starts to lose value the moment you drive it off the lot. When you buy a home, the value appreciates. We did have a little blip back during the housing crisis, but homes do appreciate in value more than any other asset that you can put your money into. In addition to that, you have a tax deduction. The interest that you pay on the loan, your payment, usually in the first 5-6 years, is almost all interest. That amount of money, whatever you pay in interest, can actually be deducted from your income. So you have a tax savings there. That, together also with what you're paying for taxes, whatever tax, where your property taxes are, can also be deducted. So when you're preparing your taxes after you buy your home, make sure you bring your closing statement to your tax preparer so they can help you and hopefully get you back some more money. So the other thing is that it's an asset. You can pass that on to your family. All of us want to leave something to our children and people that we love, and this is a great way to do it. So it is an advantage. One thing too is, as long as you stay within the HOA guidelines, you're the one who rules in that house. You're the one who makes the rules. You can paint it whatever color, as long as it's, within the guidelines of the HOA. And you can pretty much, you're the king of the castle there. So owning your own home has a lot of security, but it does come with some responsibilities. So next slide, please. Oh, disadvantages? Okay. All right, the disadvantages are up until now, you've just picked up the phone when something breaks and you call your landlord. Well, that doesn't happen anymore. You are the one responsible for maintaining that property and the upkeep on it. When the roof needs replacing, you're the ones who's going to have to pay for it. If your AC breaks, again, that's your responsibility. And that's sometimes can be an adjustment for people. So you have to learn how to save and save for an emergency and make sure you put some money away when that emergency comes. For first-time home buyers, we highly recommend that they get warranty insurance on that house. The market is a little different right now. Normally a seller would pay for that. And now, even if you have to pay for it yourself, we highly recommend it, because what that does is, should something break in your house, you have to pay a deductible, but these companies will actually pay the rest of the repair for you. That is something that you can be referred to by your lender or by your realtor. They always have more than one that's available, and they'll help you, they'll guide you to which is the best one that you can use. Let's see.
Eric raised his hand.
Okay.
Eric, if you want to put your question in the chat, or are you able to speak?
No, I'm sorry. I raised it by mistake.
Okay. That sounds good. No problem. We were
But I'm
happy to-
here.
Fantastic. Thanks for joining us.
Okay, thank you.
Okay.
All right, so well, let me go back because I wasn't done with that slide, if we could. Okay, so another thing that's a disadvantage is that it's not as easy to move when you own a home. When you rent, you can just, usually give a notice to your landlord, or, many leases do have a clause in there that if you're having to move because of a job, then you're not going to be penalized. But the last thing here I want to bring to your attention is the risk of losing your home. And one of the things, whenever I'm teaching a class, is this is what I say. People will say, oh, I'm afraid to buy a home because what if I lose it? And then I'm out on the street. The reality of it is that if you're renting and you're not paying your rent, you could be on the street in 2 months. If you own a home, the lenders are going to try to work with you to keep you in that home. I promise you this. We went through the housing crisis and we worked with 14,000 Tampa Bay area family homes and their lenders. They don't want to take those homes back. I promise you that. So don't be afraid to buy a home and thinking you're going to lose it. The lenders will do everything that they possibly can to keep you in that house. So, all right, now next slide. Okay, now here's some questions that you need to ask yourself. Are you ready to buy a house? And the first one is, do you have a steady source of income? When a lender looks at your application, and if you've been jumping around from one place to another, that's not something that they look at favorably. And a big problem would be if you're changing lines of work. They usually like to see that you've been in the same line of work for at least 2 years. If you're not, then it could be a hindrance to you getting approved. So that's one of the things. Do you have a good steady source of income? One of the things, as far as like for self-employed people, whenever they apply, one thing that they do is they always try to pay the least amount in taxes. So they try to have as many deductions, expenses as they can to write off. Well, then what happens is when it comes time to buy, if you're self-employed, the lender is going to average your adjusted gross income over 2 years to come up with what your average monthly income would be. And that's what they're going to use to qualify you. So many times that hurts self-employed people. Be aware of that. Another thing is, do you have a good credit history? They want to see how you have paid your bills. Do you pay on time? Especially if they see that you're making money and you're not paying your bills on time. Well, there's a problem there. Maybe you're not responsible. They don't want to lend money to people that they're going to have to go chase. So make sure that when you're getting ready to buy, that your credit is also in order. One of the things that they look at is your middle credit score, but I'm sure that mid-A or at some point during the series that will be covered. So do you have the ability to pay your debts and mortgage and other additional costs? They're going to look at your income and your debts and what your new payment will be, and they're going to see if you can afford to make that payment. There's ratios that are involved where, you know, what is your housing ratio and what is your complete debt load ratio? Debts that are considered are not insurance or utility bills. They're more like credit cards and you know, car payments and loans that you have to pay. That is what's charged against you when you're trying to buy. So let's see here, the plan. Do you plan to move in 2 or 3 years? If you're going to be moving, if you know that your job is changing, or for some reason you know that you're going to be moving, maybe homeownership is not right for you. Maybe you need to rent because, you know, selling a house could be difficult, and it could take longer, obviously, than if you were just renting. And the last one on this slide is money for down payment and closing costs. And I'm here to tell you that you know, you should have a certain amount saved on your own. And if you don't, you can approach a housing counseling agency, HUD certified, and we will help you find the money. We work with the city of Tampa, Hillsborough County, the state of Florida, and they each have their own guidelines as to what they will give out. Some of these down payment sources require that you put $2,000 of your own money in. Some require only $1,000. If you didn't have down payment assistance, you'd have to put in between 3 and 3.5% of the purchase price minimum. So, you know, keep that in mind as well. Okay, so the next slide. All right, 5 steps into buying a home. I'm going to add one. And the first thing I'm going to add is that visit with a housing counseling agency, sign up for a class. In these classes, you're going to learn a lot of information. And most really good loan officers prefer to have a buyer that is educated. That means that they have to spend less time educating that buyer. So it's important, it's very important that you know what you are doing and you get educated. That is really the primary thing that needs to happen. So the next thing is determine your readiness to buy a house. In our class, we have a checklist that you have to go through that tells you what are the steps and to see if you're ready. Sometimes people take the class and they realize they're not, and they have to do a little bit more work, but then in the long run, it's better for them because they won't make a mistake, and that could be that mistake could be a heartache and could be a financial issue. So you have to determine if you've got all the boxes checked to see if you really are ready. The other thing is determine how much mortgage you can afford. That is something that you and your loan officer and your counselor will be able to actually come up with that number. It's not just a number that you pull out of the air. This week, this is kind of funny. We had a gentleman who took our class, and he said that he got an email from Redfin, and that Redfin had shown him a house that was worth, this is in Tampa, okay, $150,000. And he says, I'm only on Social Security, but that he knows that he could afford that house with that payment. No one can tell you that until your lender has really had a chance to look at all your documents and all your paperwork. So please don't think that you can do this on your own unless you are in this field, because it is very complicated, and you really look to your lender to give you all the advice there. Then the next thing is determine which mortgage option is best for you. As HUD housing counselors, we're obligated to make sure that our buyers purchase with a fixed rate loan, especially our first time home buyers, because what can happen is if you go with some of these hybrid loans, balloons, and well, a lot of them are not even available anymore, you could have a problem, and it's going to come back and bite you. So a fixed rate, at least you can plan, and you know what your principal and interest payment is going to be, and you also will know the only thing that might change would be your insurance and your property taxes, but at least you know that your payment is not going to change at all. So let's see, qualifying for the loan. All right, this is important because what you need to do is to contact Hancock Whitney and get yourself not pre-qualified, pre-approved. In this market, if you are not pre-approved, don't even bother writing a contract, and no realtor worth their salt will write it for you because there's too much competition, and they're only going to take those that they already have a commitment letter from a bank that says, we're going to loan, Susie over here, X amount of dollars, because she's already been pre-approved. We have looked at all of her documents. So don't be, don't think that just being by pre-qualifying and speaking to someone on the phone that you're done. You're not. That's only the beginning. You have to provide a lot of documentation. So, and then the last thing that happens, that's the happy day. You go through your settlement and you have your closing, and that is the happiest day. We love to go to our closings because you feel like you're at the birth of somebody's child. The title companies always say, we love your closings because everybody cries, but it's happy tears. It's not, we've heard of some that are really bad, but we really try to protect our first-time home buyers because they're fragile. They are not familiar with this process, which can be cumbersome. So, okay, so next slide is who's who in the mortgage process.
Okay. What I'd like to do is just take a second and kind of recap some of the things that you touched base on in these slides. You talked about, having good credit history. Could you tell us how you help people through that process, and what, because sometimes, it's not even about having bad credit and overcoming that, it's having no credit. And so do you help them, educate them on secure loans? Do you, walk them through some options,
Absolutely.
action plans? Tell us how you help.
When someone first comes to us, the first thing we do is we have to pull their credit, which, by the way, it's a soft pull. It does not affect the credit at all, your credit score at all. So it's a soft pull as a nonprofit agency. And then we determine, we triage them. We look at their income. We look at, their stability. We look at, do they have any savings? And what we try to do is not give them a whole lot of things to do at the first meeting. And we don't like to give people more than 2 or 3 items on an action plan. Like, for example, concentrate on paying down these 2 credit cards. Concentrate on saving a little bit more money, things like that. And then when they do that, they'll come back again, and then we'll work on the next items. We've worked with people sometimes as long as 2 years to try to get them turned around. And we're very fortunate at HEA that we have our HUD intermediary has a call center that if someone needs extensive hand-holding, we actually work in partnership with them and they help us. So it's like we have extra hands at our agency to be able to do that. So sometimes people don't realize that a lot of the things and the tips that they will learn in class or through our counselors, and that is that when your balances are at the max, your score is going to be really way down. What lenders like to see is that your balances are no more than 30% collectively. Like if you've got 3 credit cards and there's $1,000 credit limit and they're all at 1,000, they want those down to at least 900 between the 3 of them. So we give them tips on how to get their credit score higher. So it's a process, and people have to be patient sometimes, because sometimes it took a long time to get into the situation that they're in. And as long as they're patient and they do as we ask, we can definitely get them to their goal without a doubt.
Okay. And are there any requirements to go through the class? Can anybody join? Does it have to be a certain socioeconomic level?
Oh, no, anyone can join our classes. Anyone can join our classes. Now, starting in July, we're going to have to start charging $50 for people who are outside of Hillsborough County, City of Tampa, or Orange County. It's a nominal fee. It's only $50. And trust me, that is the best deal in any closing to pay for all the knowledge and the guidance that they're going to get. And they have to pay for a credit report, which is $18 to pull. So that's really the only thing. Our classes are given via Zoom, and they're over 3 nights, Wednesday, Thursday, and Friday nights from 6:30 to 9. And we have a graduation at the end of the class.
That's great.
And it's really special. And in fact, Eric, who's on the call, he's one of our facilitators, and he'll vouch for the fact that many people, they don't want it to end because they've learned so much that they didn't know that they didn't know.
Yeah.
And actually on our website, there is testimonials from our Orange County class where this one gentleman, he says, you know, I already made a lot of mistakes. We just started doing this, my fiance and I, and we already made a lot of mistakes. And I said, you're going to be a good husband because you admitted that you didn't know. So anyway.
Eric is piping in here. He says, you know, it eliminates some fear, you know, and don't let anxiety, you know, overcome you and overwhelm you, and just, you know, just take an education class, and it kind of just helps you avoid some of that. So I think that's great advice.
Yeah.
Okay, so we'll go into the next slide.
You can go to our site and or Google Business and see how many good comments we've had about Eric. So
Okay, good. I believe it.
oh, I'm sorry. Where was I? Who's who? Okay, who's who? You know what people need to realize, that it's a team of people working together that brings us to the closing table with happy tears. And that is, if you pick the right partners, you won't make a mistake. For example, your loan originator, we work closely with Medea Locicero, who's on the call today. She's your community lending officer, and she is awesome. Her heart is in the right place. She goes the extra mile. I can't tell you how many people that she has helped that have come through our class, and we love her to death. She also has to work with her loan processor. The loan processor is the one who gathers all the paperwork, all the documents that Medea is going to ask you for. So they're going to gather all of that and put this into their system. That's what the loan processor does, a very important role. I will tell you that if Medea or her loan processor or anybody's asking you for documents, don't hesitate. Get them to them as quickly as you possibly can, because they can only work as fast as you provide them what they need, okay? And they do want to get you to approved as soon as possible. Let's see, the appraiser. The appraiser is the person who goes out and estimates the value on your property. And this is, I would never do the job of an appraiser for the amount of money that they make. It's a lot of work, a lot of research that they have to do. They have to compare your home, get all the details, the square footage, the dimensions of the rooms, you know, where is the house located? Then they have to, you know, find minimum of 3 other comparable sales in that area within a certain area of that house, of the home you're trying to buy, and come up with a value on that house. It's a lot of work, and I'm telling you, the appraiser does a great job in trying to come up with the values that we need. So in order for you to purchase your home. So let's see here, the mortgage loan underwriter. So once Medea does her job and then the loan processor gets all the documents, they have to give it to the underwriter. The underwriter sits and goes through all of that and just confirms that everything is correct. And hopefully on the other end of that, they'll come out with an approval for you, and the approval will detail the interest rate, the dollar amount that you're approved for, the term, everything will be on that commitment letter. That letter is what you need to give to your realtor, because the realtor will include that in the offer to the seller. Because as I said previously, you have to be pre-approved in today's market. You cannot just be pre-qualified. Otherwise, you know, they'll just toss your offer out. They don't want to waste the seller's time with someone who still has to go through the process of giving documents. So the loan underwriter is a very, very important part of this. All of these people are, they all are. Then the mortgage loan closer. The mortgage loan closer is someone who actually, it could be the title company. It could be someone who is just licensed as a closer, that they will come and they will go through all the documents with you. And there's a lot of documents. I'm just preparing you that when you get to closing, there's a lot of documents that need to be signed. And so it could be the loan closer, or it could be a title company. The title company provides proof that the home's title is clear. Give you an example. We had a closing one time, a young family, and after they were in the house for about 2 months, someone showed up on the door and said, "Where are my parents?" It was a long lost son who had, been left the family, didn't know that the parents had died. And because they did not include him, no one told the probate court that there was another heir there. He actually had claim to that house if he wanted it. But the title company searches, make sure that it's right, and they have title insurance. The title insurance protects you, the buyer, against any claim like the one that I just mentioned. So it's very important. Everyone that's involved in this is important. And I think we left off one very important player, and that's the realtor. The realtor, you have to make sure that you're working with a good realtor that understands first-time home buyers. And not all realtors are approved to work with some of these down payment assistance programs. Just like I know that Medea is approved with all the people that we work with, the county, the city, the state, so she can offer these down payment assistance programs. But sometimes you want to work with your niece or your friend or somebody that's been in real estate or just got their license. Please don't. Find someone that knows what they're doing, that is approved. And many times we have people come to us that say, "Oh, my lender says that they're approved." I said, "Did you check them on the list?" What list? There's always a list somewhere that you can find out whether they are on the approved list or not, and able to work with you. Don't want to see anybody get to the closing table and find out that it wasn't the case and there is no down payment assistance, and that has happened. Okay.
Oh, wow. Okay.
Yep. All
Well, I
right, so-
appreciate that. And honestly, and that's what, one of the questions that I ask is, kind of who handholds you through this process. And it sounds like several different people do, but the realtor, getting a good realtor is yeah.
It really is.
Okay. All right.
And they have to go through special training to work with first-time home buyers. First-time home buyers are very fragile. They're very easily led the wrong way. And so just please make sure you're working with the right realtor. Very important. Okay,
Right.
the terms to know in the mortgage process. I don't know if there's any questions so far, but if not, I'll just go on to this.
Yeah, please make sure that y'all are putting it in the chat if you have any or comments.
Angelique, I guess that's how you say that. She's asking if you've got student loans. If they are already in repayment, then yes, that is counted against you. I think Medea can probably speak to that as well. If they're in repayment, then we know what that is. I'm still hopeful that some of this student debt is going to be forgiven. I know that there's talk about that now in DC, so hopefully that does happen. We've seen people with $100,000 in student loans, which it's a sad state of affairs that that's going to prevent them from buying a house. But okay, let's see now. Terms to know in the mortgage process. Okay, I think we all know what a borrower is. That's the person who's trying to buy the house. And the creditor would be the bank that's going to be lending you the money so that you can buy the house. The interest rate is what it's going to cost you. The higher the rate, the higher your payment. The lower the rate, the lower your payment. And rates have gone up, but this is nothing stays forever. Just because they've gone up now, I think they're trying to slow down the economy. They're going to come back down again. So best thing to do is to get ready now while you're waiting. Let's get everyone ready to go so that when things do change and come down, you're going to be ready. See the APR, that's the cost of the credit. What they do is they add certain things in there, like any points that might be paid, any prepaid interest, and other factors. So it's not your payment amount. It is what it's costing you to get that loan. That's the cost of the interest for that loan. Down payment. The down payment is the portion that you have to put down. Now, 20% is what a bank would really love to see as far as down payment, but that's not realistic, and everybody knows that. So if you don't have 20% to put down, the next thing that they're talking about is private mortgage insurance. Private mortgage insurance, or PMI as it's called, for FHA loans, it's MIP. But this type of insurance is an insurance that protects the bank, but it benefits you, because it protects the bank against any loss should they lose any money if that house goes into foreclosure and they have to sell it for less than what the balance is. So that allows you to purchase a home with very little down, whether you're using down payment assistance or not. You could buy a home with 3% or 3.5%, and that's all that you would really need to put down. Of course, when you get down payment assistance, that's a big help. But private mortgage insurance is a protection for the bank, but it's a benefit to you, so you can buy a home. Closing costs. That's the cost of all. And let me say this about closing costs, because when you get to that closing table, you're going to see a lot of items on there. I like to tell people that every single item that's on there is for protection for somebody. If you have to have a flood cert, you have to have your title search. There's just so many different items that are in there, but every item in there is to protect someone, or it's because somebody got sued somewhere along the way. So now they're protecting the buyer, the bank, and everyone involved by adding a certain service, a certain fee to the closing table, at the closing table. PITI, principal, interest, taxes, and insurance. That's what's considered the housing payment. When your lender looks at your particular file to determine what you qualify for, that is going to be taken into account with the interest rate that you're going to be paying. In addition to that, if you're paying an HOA fee, meaning a homeowners association, that fee is also going to be taken into account, even though it might not be included in your mortgage payment. An HOA, now I will tell you, some people don't like them. I tend to like them, even though there is a cost involved. And one thing you don't want to do is to buy a home and then you have somebody open up a chicken farm or something next door to you. So an HOA prevents all of these things. And to me, it's a protection of the value of your home. So I prefer to be in an HOA. My home, I think, will retain its value and grow faster that way. And then an escrow account. Okay, this is something that is just such a benefit, especially to first-time home buyers. There's very few loans out there, but there are some where you don't have to put your taxes and insurance in escrow. And it's just so much easier because taxes are due at the end of the year, just before the holidays. So it's a big burden to have to come up with your taxes at that time. Insurance is the same way. You have, depending on when you close, the 1-year anniversary, it will require to be paid again. If you have an escrow account, your escrow account will take care of that for you, because every month you're putting in 1/12 of the interest and 1/12 of your insurance payment into that escrow account. So when the time comes due to renew or to pay taxes, you don't have to worry about it. You don't have to scramble to come up with the money. You don't have to send anybody a check. The escrow agent takes care of that for you, the escrow account. So I don't know if anyone has any questions. I saw something in the chat, but I couldn't get it fast enough.
I think that was about the student loans. But LaCarsha, do you have anything to contribute at this time? If not, we're going to move right into the mortgage application process with Maria.
This is great. I love it. I just want to say our goal was to educate the community, providing resources and information. But I must say, I am being educated tonight. This is a fabulous presentation, Ms. Alvarez. You speak from your heart. I love the passion that you have. I love the idea that you said you have a graduation for those who participated in your counseling session. I love that. You're walking them through the process, and then you're awarding them, you're celebrating them. So I like that. That's great. Good point. Thank you so much for all.
Thank you.
It's really interesting how the theme in each of the markets has someone like you that's so passionate about it and so knowledgeable that I just don't think people know that you all exist. And so that's why this type of thing is so important, to bring resources and information to people that just maybe otherwise wouldn't have it. You're just impacting lives. So great job.
Thank you.
I'm glad we were part of introducing you to the community.
That's right. That is right. That's right. Okay, so we are going to move on. Maria, are you ready?
I'm ready.
Miss Sylvia, you're welcome to stay on camera or off. So I'm going to get off just because I don't want to.
Well, before Sylvia leaves, I would like to say thank you, Sylvia, for presenting with us. You did an excellent job. And I have to say, Housing and Education Alliance is quite an impressive housing counselors. Their whole organization has always played a huge role in this area. And I'm honored to be able to work with them and to partner with them. And I think if anyone out there is looking to build a team, because that's what it takes, you have to build a team to get to that closing table. She's a great one to put on your team. Housing and Education Alliance is a very, very good counseling agency that can help you get there. So thank you, Sylvia.
Thank you.
So let me go on to introduce myself. Let me tell you a little bit about me. I'm Mireya Lucicero, and I am the community lender for the Tampa Bay area and also for several other areas in the state. Right now, for this series, we're focusing in Tampa Bay. So just want to make sure that you know that I'm certified in pretty much all of the programs that are offered, whether it's in Hillsborough County, Pinellas County, whether it's bond money through the state of Florida. I've been in this industry now for over 25 years, and I've actually been with Hancock Whitney almost 7 years now. And just like Sylvia, it is my passion to help first-time home buyers and to help really everyone to try to get to that closing table and make sure that everything is going well for them. Basically do it on an elementary level is what I like to say, to make them comfortable, to hold their hand and know that my objective is to protect them, to make sure that everything goes well for them. So that being said, I'd like to take you through the mortgage application process. And there's 3 stages to the application process. There's the pre-qualification, there's the conditional approval, and then there's the final approval. So at the pre-qualification stage, this is where the borrower is going to provide all of their most private, intimate information from the standpoint of finances, what they make at their job, how long they've been there, what's in their checking account, what's in their savings account, and so forth. You're going to tell us verbally. For example, most loan officers, even though you're telling them verbally, they also want the proof in the documentation as they take you through the process, even before you get to the underwriter's desk. So they will also ask you for what I like to call the 222s and 30. 222s and 30, meaning they're going to be asking you for 2 months of your bank statements. They're going to be asking you for 2 years of your tax returns, 2 years of your W-2s, and 30 days worth of your pay stubs. Once all that information is gathered, then we can go ahead and move you over to the conditional approval stage, which means we have now submitted your file to the underwriting department. Of course, when you're at the first stage, you don't have a property yet. You're still searching for that property, but we've given you a letter that tells your realtor it's okay for them to spend time on you. You're ready, you're mortgage ready, and they're not going to waste their time. They're not going to waste their gas if they take you out searching for homes. That's what happens in the very first stage. And even before that, that's where you work with Sylvia and with the Housing and Education Alliance to make sure you can get to that point. After we've provided that letter, then we go on to finding a house. Once you find the house, that's when we, as your loan officers, as your community lender, I'm ready then to submit your file to the underwriter. I will submit your file to the underwriter with your contract, with all the paperwork that you've provided to me. And then the underwriter is going to review all of that information and determine if she feels comfortable signing off on your loan. She's not going to give the final approval yet. She's only giving at that point a conditional approval, meaning she may have gone through your file and realized that, oh, wait, they forgot to include page 3 of bank statement number 2, or the tax returns are not don't have all the schedules included. That's why it's called a conditional approval, because the underwriter is saying, I think I can approve these borrowers, but I have to give them a few conditions because they have to cross their T's and dot their I's. So that's what takes place during the conditional approval process. Once all of that information comes back, all of that documentation comes back, then the file goes back to the underwriter. At this point, an appraisal's already been ordered, an appraisal's been returned. So now, not only are we searching for a credit approval, but we're searching for that collateral approval as well. 2 working parts. We have to approve the borrower, and we have to get the property approved too. So when we get to the final approval, that means that the underwriter has received both all of the credit information and all of the collateral. The collateral is the house, the value of the house, what you're purchasing. When she has both of those parts together, then she can go ahead and sign off on that loan so that we can get you final approved. And then, of course, it will go through a few more departments like the compliance department and the closing department to get you to the closing table where we fund the loan. And at that point, me as your community lender will have also been working with perhaps the city of Tampa or Hillsborough County or the state of Florida to get you that soft second that's going to help you have to bring less to closing. That soft second is going to assist you with the amount that you need for your down payment, for your closing costs, and for your prepaids. So those are the 3 stages: the pre-qualification, the conditional approval, and the final approval. Now we can move on to the road to home ownership. There's 5 different things that we're going to be going through. On the road to home ownership, there are 5 key factors used to determine a borrower's ability to obtain and repay a home loan. Just kind of want to give you a little footnote here. I want you, when you go to apply for that mortgage, because it's going to feel like it's a daunting task that we're asking for so much information. Why do they need so much documentation? I know I'm good for this loan. I'm going to pay my loan back. Look, I've been paying my rent on time. I want you to keep this in mind so that you can be patient with us and understand where we're coming from. If I were to go to you, because you really don't know me, right? If I were to go to you today and say, Mr. Borrower, would you please lend me $250,000 because I want to buy that house down the street? How much information would you want to know from me? How much information would you like me to give you in order to feel comfortable with me lending you $250,000? That's the frame of mind we all need to be in. So that being said, the 5 key factors used to determine a borrower's ability to obtain and repay a home loan is the character, which is the application process. That tells us what the character of that loan is going to be like, what the character of the borrower is like. The capacity, meaning the mortgage affordability. What's your range of affordability? We want to make sure we have an accurate picture of your buying power. Your credit, in other words, what can we expect? Has this been a borrower that pays their bills on time, or have they been a little not as responsible as we would like them to be? The capital, have you been able to save any money? Some people have, some people haven't. It's okay if you haven't been able to save a lot of money. That's what those assistance programs are for. So don't hesitate to try to buy a house because you think you have to save up $15,000 or $20,000. That's not the case. If you are at a certain income, there's going to be programs out there that make you eligible for assistance. Okay, it's all based on, all those programs are income eligibility and also location driven. They're income driven and location driven. So keep that in mind. And it's my job to tell you, once you apply with us, which programs you are in fact eligible for. And then lastly is the collateral. The collateral is what we're going to hold as security to make sure that we are paid back. So the value of that property is very important to us. It has to match what we're lending you. When that contract is written, we're going to lend based on either the sales price of the house or the appraised value, whichever is less. So you may buy the house for $250,000, but if the house gets appraised at $230,000, we can only lend based on that $230,000. So at that point, you end up going back to your seller with your realtor, of course, and you kind of renegotiate the deal to make sure that you're not overpaying for a property. Okay, so next we're going to go into more detail on the application process. So this is the part that a lot of borrowers become a little intimidated because we're asking so many questions. So I think if maybe I share with you what the application is going to ask you for, you'll be a little bit more comfortable about going and completing it without, hesitation, because it's going to get you to that closing table. It's the one of the most important steps that you can complete. And when you're completing that application, it's important for you to give your information as accurate as possible. It doesn't have to be exact, but it needs to be as accurate as possible. Remember, I'm also going to be asking you for all of the documentation to support the information that you've given me on that application. So if you're off a little bit on something, it's okay. I can fix it. I can fix it in the sense that before your file is submitted to that underwriter, you and I are going to be in constant, conversation regarding your file, trying to determine and pinpoint why. Okay, so you mentioned that you had this much saved, but your bank account only says that you have $2,000 instead of $5,000. Do you have another account somewhere else that has $3,000? If you do, okay, great. Send me that bank statement as well. So there's time to make sure that we can edit your file from the time you complete your application to the time that we go to submit it to that underwriter. So don't be overwhelmed or intimidated by that application. It doesn't have to be exact. It just needs to be as accurate as possible. And when you send me those documents that I'm going to be asking you for, I'm going to go back and correct whatever's not correct before it goes anywhere else. Okay, so let me tell you about the application itself. Page 1 has to do with your personal information. Like, for instance, what is your date of birth? What is your marital status? What is your social security number? Where do you live? I have to capture at least 2 years of your residency. I also have to capture at least 2 years of your employment. So all those questions are going to be asked on page 1. It's mostly about you, your personal information, date of birth, name, addresses, social security, that kind of information. Also, it's going to ask you more or less, what kind of price range are you looking for, so that we know where to start determining what your affordability is, okay? So on page 2, let me scoot up here. On page 2, we're going to be looking at your financial information. It's going to say assets and liabilities. So the assets and liabilities have to do with your bank accounts and with your debt. Assets are things like how much you have in your checking, how much you have in your savings. Do you have a 401k plan through your work, maybe an IRA, pension plan? All of that information you need to go ahead and list on that application. Why? Because that is going to make you look that much better in front of the underwriter, because now you're giving the lender security. You're letting them know that, look, this is someone that has been able to save in some way, shape, or form, or has a little bit in reserves. So when they buy that house, if the refrigerator breaks, no problem, they should be able to replace it if need be. But if you don't have a lot in reserves, that's okay too, because there's certain programs out there that do not require it. So don't let it overwhelm you or intimidate you. Just apply and we'll tell you where you stand. Now, as far as the liabilities, that has to do with debts like, for instance, your car payment, your credit card debt. And those liabilities are not something that you have to go back to and itemize yourself, because we're going to pull your credit and we're going to merge your credit into the application. So that process kind of takes care of itself through your lender, okay? As far as, as far as page 3, the financial information, on page 3, what we're looking for is to determine if you've owned any real estate in the past. Most first-time home buyers, of course, have not owned any real estate because this is the first time they're buying. So something else to know about a first-time home buyer, in case anyone that has owned a property in the past, to be considered a first-time home buyer, you just have to not have had ownership interest in a primary residence in the last 3 years. So let's say that you owned a house 5 years ago and you sold it 5 years ago. Well, today, if you haven't owned a house since then, you are now considered a first-time home buyer again. So that's a great little fun fact to know, because guess what? Depending on your income and if you're eligible, if you're a first-time home buyer, you may be eligible for all those assistance programs out there, even though you owned a house long ago because you lived in another state or something a while back. So that's what we're trying to find out on page 3 regarding the real estate information. Now we're going to move on to page 4. And in page 4, again, this one has more to do with the subject property itself. You're not going to be able to fill any of that information out at the beginning because you haven't selected a subject property yet. Once you give me the contract, then I go into your application and I put all of that information in. So page 4 or section 4 is not something that you're going to be filling out a lot of information on. It does ask for your rental information or something to that effect, but it's very simple to complete. You'll see it. Or maybe you're going to be receiving a gift. Maybe you're a parent or an uncle, a family member is going to provide you a gift for that towards your down payment. This is where you would tell us about that. Okay. And now we're going to move on to page 5, which are the declarations. Now, page 5, when you start to read through those questions, trust me when I tell you that you're going to feel like you're being asked the same question 3 or 4 times in a row, but in a different way. And really the full purpose of it is to determine if there's been a foreclosure in the past or if there's been a bankruptcy in the past. And the reason for that is because there are guidelines surrounding those derogatory events that we have to be made aware of. And we're going to find out one way or another, whether it's through the credit report or whether it's through you letting us know. But it's important to divulge that information so that we can accurately guide you on how to proceed in the application process. So you want to answer these declarations as honestly and accurately as possible, because there could be penalties for not doing so. But again, it's for the purpose of making sure that we're guiding you properly through the process and let you know where things stand for you. And then section 5 is still having to do with the declarations. Maybe I was already there and copied the page twice. I'm sorry. And then the last page, of course, on that declaration page, it also gives the loan officer's information and so forth. But it's really a very straightforward application that, for instance, if you're applying with me, I provide you with the online link. And it's great because you're able to complete it at your convenience. That link is available to you online 24 hours a day, 7 days a week. So you can complete it at any time. If for some reason you're having a difficult time with it, you can email me or call me. Please, probably not at 3 o'clock in the morning, please. But during regular business hours, I typically try my very best to answer the phone, or if not, you can email me. And we can work through it together to make sure that you're comfortable with what you're doing. The system itself then alerts me to the fact that you've completed your application, and then that immediately tells me that I need to get to work on your behalf. So that's a pretty in-depth summary, let's say, of what the application process is, of how to complete that application. Now we're going to move on to capacity, meaning.
Ask you really quick, if you don't mind, before
Sure,
we go
I'm
on to
sorry.
the next session, where in this entire process do you do the application? When do you do it? Like when you find the house, when you didn't find the house, when you get the realtor, and this is the time, perhaps if you could elaborate on what Ms. Sylvia talked about with pre-qualification versus pre-authorization, or right?
Okay. So yes, pre-approval. Okay.
Pre-approval,
So
okay.
as far as where the application should be completed, your first step should be that housing counselor. Sylvia's Housing and Education Alliance to make sure that those housing counselors will get you to where you are mortgage ready. Okay, that's your first step. Once you have gone through the housing counseling sessions and done that home buyer training course, then you're going to be ready to come to me or to a lender, so that then we can go ahead and start the process of the pre-qualification or pre-approval. Let me clarify. So as it pertains to pre-qualifications and pre-approval, everyone does it a little different, okay? When you are dealing with a mortgage broker, they will be able to provide you with a pre-approval because mortgage companies or mortgage brokers don't have the same level of regulations or liability that banks do. Banks, you will find that they mostly all provide you with a pre-qualification, but a pre-qualification from a bank probably has the same weight as a pre-qualification, as a pre-approval from a mortgage company. And the reason I say that is because not only do we make sure to gather the documents and not just take your verbal information for it, but we are also ready and able to speak to your seller and to the seller's realtor to make them aware that, hey, we have a strong buyer. I have all of the documentation in front of me. I've been doing this for 25 years. I can't tell you that they're completely approved because I'm not the underwriter, but I can tell you have a strong buyer here and you're good to go. So there is a difference between the two, but depending on who is originating that loan for you as to what weight it carries with those realtors. Gotcha. And I work with many realtors, and we do down payment assistance all day long, and I issue pre-qualifications. I agree with Sylvia that this is a fierce market and that it's difficult to get an offer accepted sometimes when you have a contract with a pre-qualification versus a contract with a pre-approval. But if you have a reputation backing that pre-qualification and a lender that's willing to talk to the people for you, that can actually carry more weight than just a pre-approval from a mortgage company. Okay.
Okay.
So,
and then Eric piped in and said most realtors will not even talk to you unless you get a pre-approved in today's market. So and yeah, we're crystal clear on that. Okay. So
and we are working to see if the bank would allow pre-approvals. We're constantly trying to evolve with what the market is requiring. So there's language in the letter that could possibly be tweaked, and that may be in the near future. As it stands right now, what we issue is pre-qualifications. But again, that pre-qualification is backed by a phone call. It's backed by the documentation. I don't like to issue a pre-qualification unless I've already seen the documents.
Gotcha.
Even though the borrower has given me the verbal information, I'm requesting that documentation to make sure that what I'm saying isn't going to make that realtor waste his time or her time.
That makes sense.
Okay.
That makes a lot of sense.
All right.
So
now let's move on to.
Yeah. Okay. Gotcha. You got capacity, and we mentioned that these are 2 of the 5, and then the other ones will be discussed in the series. So this is awesome. Thank you.
Yes. This is the second part, which is the capacity, because the others will be discussed in part 2 and 3. So please be sure to join us for that. And the capacity of mortgage affordability, that has to do with your qualifying income, your employment history, your additional income. So if I could have the next slide, please. All right, so here we go. So on qualifying income, that is, again, having to do with that application information. It has to do with the gross income versus the net income. And I want to make sure that you know that when we determine what a borrower's qualifications are for the repayment of that loan, we use your gross income. When you get your paycheck, what you actually gets deposited into your bank is your net income. We don't use that number. We use the full amount that you get paid. We use your gross income to determine what you can afford. Your 2-year employment history, we're going to need your pay stubs and your W-2s If you receive commission or tips and bonuses, or if you have a part-time job, seasonal, and a second job. We need to know all of that information, depending on how long you've been in that seasonal job or that part-time job, as to whether we're going to be able to use that income or not. And for self-employment, Sylvia put it very well. We need your tax returns. We need all of your schedules. And sometimes we even need a balance sheet and a profit and loss. But for the self-employment, what you need to keep in mind is that whatever your tax return says, that's what we as a lender, we are regulated. We have guidelines that we have to go by. That's what we have to use to qualify you. So if I have a borrower who has a business that makes $100,000 a year, but his tax return says they make $10,000 a year, and the year before they made $8,000, even though the business made $80,000, I have to take those 2 years, the $10,000 and the $8,000, and average them together, and that's your buying power, $18,000 over a 24-month period. That I have to average that out and run with that. So keep that in mind when you're filing those tax returns. Be sure to consult your CPA and your accountant. And if you're looking to buy a house, make sure that you make your accountant aware of it, because whatever you're putting on your tax returns and telling the IRS is what we have to govern your file by. We have no other choice. Those are the guidelines. No matter how much you tell me you make, if you're not reporting it, it's like you didn't make it. Or if you're taking too many deductions, it's like you didn't make it. I'm not an accountant, but that CPA and that accountant can certainly help you to make sure that you're utilizing your income to its full potential to ensure that you can qualify for that mortgage affordability. The additional income, as far as Social Security income having to do with disability and retirement, we would need things like your awards letter to prove that you're receiving that. If you're receiving child or spousal support, we're going to ask for that court order that tells us just how much you're receiving for it. Okay? Any questions so far? All right, let's move to the next slide then. Okay, so the mortgage affordability qualifying ratios, there's a front end and a back end. Your front end is the housing ratio, which is your gross income versus your proposed housing payment, okay? It's your gross income versus your proposed housing payment. So let's say that your gross monthly income is $2,500 a month. Well, there's many programs out there, and the majority of them carry a housing ratio that allows you to have a much higher housing ratio than 30%. But let's use 30% as an example. So if we take your gross income and we multiply it by 30%, then that means that your total monthly payment, that proposed monthly payment, should not be any more than $750. Okay, 2,500 multiplied by what the guideline says your front end ratio should be is what gives us what your total mortgage payment should equal. It shouldn't be above that, because then you're going to have a tough time qualifying. Let's look at the back end ratio, which is called the debt to income ratio. You'll hear your lenders say that a lot. So they refer to it as the DTI. The debt to income ratio is the proposed housing payment plus all of your debts, your auto, your credit cards. Now, utility bill, that's not a debt. Your cell phone bill, that's not a debt. It's revolving debt like credit cards, okay? Or maybe you have a personal loan, any installment loans. Those are considered debts that have to be included in the back end ratio. So we take your proposed housing payment and we add all of those debts to it. And that total multiplied by, in this example, 43%, tells us that your estimated DTI, total monthly payment, total monthly debts, should not equal any more than $1,075. And this is merely used in, these numbers are merely an example that they're using. It states right there, the example shown in this is for informational purposes only and may not reflect an individual scenario. So no worries, and we're not saying that this is all that you can, this is what you have to make, okay? We are going to take care of verifying everything and together with the program that you and I choose to determine what's going to best suit your needs so that we can establish what your front end ratio should be and what your back end ratio should be, okay? And of course, normal credit criteria are going to apply depending on which program is chosen. And are we at the end?
I think we are. That was smooth
Well, now-
sailing. That was fantastic. I mean, you can't streamline and be more efficient than that. Really, I think,
Well, now I get to thank you. I want to make sure that I get a moment, if it's okay, to talk a little bit about some of the programs real briefly
absolutely,
that we have to offer.
absolutely. And if
Okay,
LaCarsha,
terrific.
Miss Celia, if y'all want to come back on, and make sure that we round it out with any additional comments. So please, yes,
Okay.
please continue.
All right, so now that we're at the end of the presentation, I want to make sure that the audience knows that Hancock Whitney is a great bank. We pretty much put our money where our mouth is, in the sense that we make sure that in addition to whatever down payment assistance programs I can locate for you, that the community lenders can locate for you, we can also layer, meaning stack additional programs on top of that. So for example, if you're buying a house, let's say for $250,000, and we're able to, facilitate your application with the city of Tampa, and the city of Tampa agrees to lend you as a soft second an additional $50,000 towards your down payment and closing, towards your down payment. In addition to that, you may have a lot more buying power because Hancock Whitney has two programs. One is the HELP grant that provides up to $11,000 to eligible borrowers, and that's a grant. Doesn't have to be paid back. You just have to stay in the house for 5 years. And plus that, we have our very near and dear to my heart Plan Your Way Home campaign, which is a lender credit that provides up to $5,000. Now this one is towards closing costs and prepaids. So the HELP grant can help with the down payment plus closing costs and prepaids, and the Plan Your Way Home can help towards the closing costs and prepaid. So that is a total of up to $16,000. You have to be eligible for it. I have to make sure that I request it for you and that you meet all of the criteria, but it is available to first-time home buyers. Thank you. I appreciate your time, everyone.
That's perfect. Okay, Miss Celia or LaCarsha, y'all want to bring it on home, drive it on home with any additional comments or updates? You're on mute, Miss Sylvia.
I just want to make sure that everyone understands that, we do have classes that people can register for. As I mentioned earlier, I just see Eric's chiming in. I will just add that in order to get the assistance, you need to take that first-time home buyer class. That's for sure. And I promise you, most classes are just somebody reading or somebody just talking. Our classes tend to be full all the time because it's great information, but it's the way that we deliver it. It's done with edutainment. It's with cartoons, games, funny videos. We believe that you need to make life fun. And
Right.
when you make it fun, people are going to retain better than when you're sitting like this for, 8 hours or whatever. But we break it up over 3 nights. And I have to say that anyone who takes this class and with Eric, they're a fan of Eric's forever after that. So I don't know how many children have been named after him.
Well, he certainly has been a silent participant tonight. I don't know what he would do if he was actually on camera.
You
We've
can't
had a lot
imagine.
of fun.
I have to tell you that we had a class, and there was a lady who was pregnant in the class. It was first night, and she went into labor that first night. So we did not expect to see her back for night 2 and night 3. So lo and behold, Eric turns on the camera and there she is. She's in the hospital room and her baby is right next to her. So actually, Eric created the very first home tracker baby certificate, and we gave that baby certificate too. So
That's
Wow.
awesome.
Well, we do
Excellent.
appreciate everybody. I've learned something every night this week, and certainly today was just really awesome. And I do hope that everybody that's on the call will continue to look at the channels that you found out about this particular series and this part one. Let me stop sharing so we can, and then and tune into series 2 and 3. So it's going to be in May and then June. And I'm certain that we're going to see some of these faces again. So we can build those relationships that I know Hancock Whitney is really hoping that we do. So I really enjoyed this. I appreciate you, and look for the recordings that will be coming out very soon. We'll have them on imlegacy.org. That is the Legacy Business League's website. That's also where you can register for the upcoming events. So that is definitely a resource there, or our Facebook page.
Absolutely.
So if there are not any other additional, what you got, Karsha?
I just want to close by saying I hope the information, as everyone has already said, has been beneficial. It has been helpful to everyone as we present this series to you. I will say again, this is the end of session 1, but it's not the end of the mortgage loan process that we're going to provide for you. We hope you have been helped. I know that I have. It's been very educational throughout all 3 nights, starting with Baton Rouge, then Gulfport, and now tonight in Tampa. But our goal is to make sure that you're more prepared and you're less overwhelmed and you're more confident as we walk you or navigate through the home buying process, because it is the American dream and it's a key component for creating generational wealth for families and communities. And again, month of May, we're going to come back and we're going to talk about credit management, budgeting, as well as being financially healthy. We want to help you to avoid those financial pitfalls. We want you to remain in your mortgage once you get into it. And then we'll conclude in June, which is also home ownership month, with session 3, where the information that Maria started speaking about tonight, she'll be able to elaborate a little bit more in detail to talk to you about the different grants that we have available that can assist with down payment as well as closing costs. So again, thank you all for participating. Thank you to all of our participants, our partners, our community lenders, everyone that has joined. You made this this series very successful. Special thanks to Legacy Business League. I always enjoy working with you and the expertise that you provide and the professionalism. So thank you as well.
Thank you. And thank you for bringing it
Thank you
home.
very much.
I appreciate you, LaCarsha.
Absolutely.
Okay. Well, y'all have a good night, and we'll see you during some of the other series.
Sounds great. Good
We
night,
appreciate the support and the attendees. Thank you.
Thank you.
Bye-bye.
Bye-bye.
Maria, good night.
everyone.
Good night.